It's a pleasure to be here again in Oslo. Thank you again for the invitation. It's always great to start off a year with this conference. I'm going to talk about 5 paradigm shifts that I think are really important. So I'm going to keep the specific issues that are on everyone's mind for the Q&A, and I'm going to try to think and talk to you about the broad themes that are changing the world around us. First of all, I think the biggest paradigm shift is that there's really 2 jobs that you should tell your kids to go to after the recent election. One is to be a geopolitical strategist. The other one is to be a talk show host, a comedy talk show host, if you will, because there's going to be plenty of material over the next 12 months for comedy writers. I think that's the one industry that's going to do very, very well. So in terms of what I think is very important, what I always try to emphasize when I speak to an audience like this is that political analysis is not voodoo. It's something that has a method to it, and there's a deep academic and professional literature. People have done it for a very long time. Governments have to do it all the time. It's part of what intelligence agencies around the world do. And saying, oh, well, they get things wrong is no reason not to do it, because we all get things wrong. If we didn't, we wouldn't be sitting at an investor conference. We would be on our own yacht somewhere in the Caribbean, not caring about what anybody else has to tell us about how to invest. So in other words, it's very important to think about how to think about politics. And the one thing that I've emphasized at this conference before is to think about policymakers, people making decisions, not in terms of what they want to do, but in terms of their constraints. And this is because preferences of policymakers are they're optional. You know, you can act on your preference or not, and they're subject to the constraints. Whereas constraints policymakers face are neither optional, you can't wish your constraints away, nor are they subject to preferences. The 2 charts I have on this slide illustrate how the market is very poor at assessing the constraints preference issue. On the left side shows you the probability of breakup of the Eurozone derived from bond yield spreads, in this case Italy and Germany and Spain and Germany, on a 5-year interval. It's a 5-year maturity. So what is the probability over the 5 years at each point in time that the euro area would break apart? In 2012, July 2012, which is where this chart is frozen, the probability of euro breakup was 80%, according to the bond market. And this is because, in my view, the market misunderstood the constraints facing policymakers in Europe to actually dissolving what is very tricky to dissolve, very painful to dissolve, which is the currency union. On the right side is one of my favorite charts, especially for the group that I'm talking to right here, because it shows the Russian geopolitical risk premia. And how do we define geopolitical risk premia in Russia? We look at the ruble, and we look at its moves relative to the Norwegian krona, actually. Why? Because both currencies have some similarities, mainly its focus on oil. And so any changes would suggest that the ruble is reacting to something other than domestic economic conditions and oil prices. And what this chart shows is that the last time I spoke to you, which was in early 2015, the Russian geopolitical risk premia, as measured by our chart, okay. That's even worse. Okay. Hello? Better? Yes? Okay. So the right chart. The right chart is my favorite chart because the last time I was here, early 2015, the geopolitical risk premium of Russia spiked to its highest in, well, really since we've measured with this risk premium. And what, again, the market was mispricing was the constraints facing Vladimir Putin in actually doing anything further in Ukraine. There was talk of a land bridge to Crimea, you may remember, capturing a wide swath of Ukraine to connect Donbas region with recently annexed Crimea. There was talk about the Baltics perhaps facing an invasion. And all of these were probabilities derived from perceived preferences of Vladimir Putin. Now, what are preferences of Vladimir Putin? I don't know. You don't know. I assume it is to recreate the Soviet Union. Why not? I would if I was in his shoes. The point is, who cares? What we care as investors is what can he do given his constraints. And in my view, it was not much, which is why that geopolitical risk premium went down and then back up and then down. And I assume that it will go down further from these levels. So the key takeaway from here is that even though we're facing a world full of paradigm shifts, even though the world is really changing and we're on unsafe ground, it only reaffirms more that we need to focus on the material constraints policymakers face. What can they and what cannot they do? So the first thing I want to talk about from the 5 paradigm shifts is this idea of multipolarity. Then we're going to talk about globalization. Then we're going to talk about changing nature of authority in the world. Then changing nature of economic policy. And finally, changing nature of news itself, of information. The first point is that the world we live in is a multipolar one. It's a very key point. It means that nobody's in charge. 2 years ago when I talked about this, it may have been a little bit controversial. I don't think it's really controversial anymore. It's pretty clear that the US is no longer a global hegemon. We can throw some figures to back this up. On the left side is our own geopolitical power index. Relative to the world and relative to China, the US has definitely, its power has definitely eroded. It's still the most powerful country in the world, but it's not as powerful as it used to be. On the right side, I use the Herfindahl-Hirschman index, which is usually used to gauge monopoly in a certain sector, whether a company has become a monopoly. It gauges the concentration of something. It shows the global concentration of GDP and of imports, and if I showed you military expenditure, it would look the same, has declined since the peak of American power in 2000s. Why does this matter? It matters because we know from political science theory that multipolarity leads to conflict. As you can see on this chart, this is a chart going back to the Second World War, and it shows the number of interstate and internationalized internal conflicts. Other than the period when the Soviet Union was collapsing, which is shown there in the middle, circled in the middle, which created instability in the 80s and early 90s. Other than that period, we have been in a period where usually every year there was between 4 and 8 internationalized conflicts in the world going on at any one time. We just hit a record, post-World War II record in 2016. And we at BCA predicted this would happen, not because we're smart or anything, but because we just assumed that the theory of multipolarity would hold true and that conflict would ensue as the world lacked a hegemon. Now, one interesting thing about this multipolarity, about this increase in conflict, is that it creates a messy place for investors. Obviously, we suddenly have to care about what's going on. But I think a broader picture is that if you think about what country stands to benefit the most, ironically, it's actually the US. It's just really hard for the US to lose. And it's a function of geography. It's a function of distance. It's certainly, thanks to American spirit as well. I'm sure that's part of it. But the reality is that that the US is the ultimate low beta country. It's a low beta economy. It's a low beta equity market. It's also a low beta geopolitical entity, if you will. This chart is a way to calculate power, a way to calculate state power, going back 200 years. And what it shows is a chart of American power. As you can see, after the Civil War in the 1860s, there was a steady rise of American power. The two shaded areas are the world wars. There was nothing better for American geopolitical power than global conflict, than complete calamity. And that's because it's really tough to bring war to the United States. So if multipolarity does lead to greater conflict around the world, the US is likely to benefit from it actually the most. So that's kind of the irony of the multipolar era. In terms of what are the investment implications of multipolarity, I think the first, increase in global conflict, we're living it. Here it is, nothing else to add. We're going to see more of it. Predicting it is going to be very difficult. It's hard for me to say whether Russia is going to have its fighter jet shot down by Turkey. But what I can tell you is that we live in a world where those kind of incidents are more likely to continue to happen. And that's a structural reason. It's not, because of anything extraordinary. Second is that geopolitical risk will continue to be positive for safe haven assets and defense equities. That's a sure thing. And finally, the US has ultimately always benefited from global risks and conflict. And perhaps that theory is going to be put to a test now that it has a celebrity reality TV game show host with an attitude span of my 4-year-old as president. Perhaps that will test this chart this time around. But I think it will do okay. Or rather, it will do less bad than everybody else in the world that's coming. Now, last time I spoke to you 2 years ago, I made a point that a key part of multipolarity is that it's incompatible with globalization. Now, I will forgive you if you slept through that part, because 2 years ago, nobody was talking about the collapse of globalization, except maybe some academics. But today, this is the investment theme that everyone's talking about. And we are basically living through apex of globalization. Now, this chart shows trade globalization calculated as imports as percent of GDP for as many countries as you can calculate over 200 years. And what it shows is that the only persistent periods of increasing trade globalization, which I assume is a proxy for all other kinds of globalization, were when there was somebody in charge, when there was a country that underpinned the rules and norms of globalization. So that's a thesis I talked to you about 2 years ago. It's played out right now, so I'm not going to spend too much talking about it. But the bottom line is a multipolar world is a world that isn't really compatible with continued globalization. Why? Because countries like China, like Turkey, like Iran, like Russia, like Europe, don't want globalization necessarily. They want regionalization. They want their own spheres of influence, and they will start competing for them. That's what Crimea was about. That's what what's going on in Syria is about. That's what Chinese assertiveness in South China Sea is about, or the One Belt, One Road policy are. So it's very difficult to see globalization continue if everyone is trying to regionalize their economic influence. By definition, one doesn't work with the other. And that certainly is the reason we had First World War and why we had rising protectionism in the late 19th and early 20th century. But of course, there's another challenge to globalization, which we've all talked about, and that's that globalization has also been eroded from the bottom up, that there's no more buy-in from the people. The reason for this is this interesting chart where I've basically shown together global population living under capitalism. That's the dotted line. It shows that people living under capitalism went from 30% of the global population to 100% in basically 20 years. And this was largely correlated with the decline of pricing power of US households in terms of their wages. This is normal. If you expand the supply of something, the cost of it is going to come down. If you expand the supply of global labor, the cost of labor is going to go down, especially where it was high. And that's what globalization did. Ultimately, this is what globalization is. This is fundamentally what it physically is. And as World Bank economist Branko Milanovic shows, it's this famous elephant trunk chart, which on the x-axis shows the percent of global income distribution by different income levels. So over there, 70 and 80 and 90th percentile, that's people in the advanced economies. That's the higher global income brackets. And the lower income brackets are India, Indonesia, emerging markets, and then frontier markets, and so on and so on. And what this shows on the y-axis is the growth rate of their income. And basically, between 1988 and 2008, the people who saw most of their income rise are those in the 30 to 60% income range. So those are the emerging markets that we've all invested in, that we've profited from, that SKAGEN has been so successful investing over its last 20 years. Those are the countries where income grew as free trade and capitalism expanded. And then, of course, the extremely upper classes in the developed markets. But the middle class in the developed markets, the 70 and 80th percentile basically saw very little income growth. And this has now come back to bite us, if you will. These are the people who revolted. These are the people who voted for Trump. On the left side, you see that they're not necessarily wrong. Imports from China rose as manufacturing employment collapsed in the United States. On the right side is a very fascinating poll taken by Pew Research in 2014 that asked whether trade creates jobs. And what's interesting about it is in the US, only 20% of people agreed with the statement that trade creates jobs. So this was 2 years before the election. There was basically evidence that very few Americans actually believed that trade was good. So it's not surprising that we now have globalization being openly talked about as a dirty word. 20 years ago, you had the Seattle protest, you had various NGOs that fought against it, you had academics talking about the problems with globalization, but you never had a policymaker go out and say this is a problem. Now you have Theresa May making a speech saying that globalization is a problem, and of course the President of the United States is firmly against globalism. So what does this mean for us as investors? First, multinational corporations benefited from expansion of world trade. It's a left side chart. Tough to see that continue. Second, different sectors are exposed to globalization in a different way. This shows you on the right side the S&P 500 foreign sales as percent of total sector sales. The IT sector stands pretty starkly as exposed to foreign competition. If Donald Trump gets his border tax adjustment plan through, sorry, it's actually not Donald Trump's, if the Republicans in the House get their border tax adjustment plan through and it's retaliated against by China or by other countries in the world, I'm pretty sure that the IT companies will be the first to suffer because everybody wants to have an IT sector. So if you're going to start import substitution industrial policy in the 21st century, you're not going to do it with fridges and trains. You're going to do it with social media companies and internet sales, retail sales platforms. So that's the first thing. The second thing is that there's many sectors that aren't exposed to foreign sales, such as consumer staples, healthcare, financials, telecom, and also energy. Although it's very exposed to foreign sales, it's difficult to be protectionist against because if you could, you would have domestic energy. If you don't, you need to import it. You can't, if you don't have oil, you're not going to put tariffs against oil because you don't have any. So that's why that one I wouldn't put in the danger zone. The other issue is in terms of countries. I think it's very dangerous to be overexposed over the next, in the long term. It's dangerous as an investor to be overexposed to any country that is extremely dependent on exports. And if you look at this chart, it shows the winners of globalization. So on the x-axis is GDP per capita growth from 1981 to 2015. So who became wealthier over the last 30 years? On the y-axis is export per capita growth, same period. And as you can see, East Asia, especially China, have benefited greatly from globalization. East Asia in particular. Now, the reason I'm not that bearish about China is because China actually does have a domestic market. It has about 400 to 800 million people in the middle class, depends how you classify them. And if China becomes protectionist, I'm pretty sure it's going to do just fine. Companies that want to sell to its middle class are not going to do fine. So I think that that's something that investors have to think about in this new paradigm, which is mercantilism. Economics, trade, finance will become tools of statecraft. They'll be manipulated by policymakers for geopolitical gains. Theresa May is already telling you this in her speeches. I mean, and this is the United Kingdom, the birthplace of global free trade. Investing in emerging markets, I think, now requires an understanding of their geopolitical risks as they'll be exposed to these shifts. And I think what's happening is good for consumer-oriented sectors and economies, which tend to be small caps no matter where you're investing. So small caps tend to be domestically oriented in almost universally across equity markets. And I think it's also very good for developed markets that have much better consumer bases than emerging markets. Not all. There are emerging markets, of course, that are very much consumer-driven, like India. India doesn't really export anything. So, I mean, I'm being hyperbolic. But the reality is India is going to be fine in a deglobalized world because they never really joined globalization to begin with. Brazil, also interestingly, although it does export a lot, has a huge domestic market and is actually a domestically driven economy as well. Also, finally, the obvious point is that if globalization was good for deflation, if it created this massive supply side, it means that it will be good for inflation. So if you're looking for an inflation, for a return of inflation, this is one of the reasons that it's coming. The third paradigm shift is a little bit weird, if you will, a little bit maybe disconnected with investing, but I think it's worth pointing out, mainly because I want to try to explain why suddenly we all need to, as investors, I think we all need to start following Donald Trump's Twitter feed. In fact, there should probably be on the CFA exam a whole chapter on how to analyze tweets of policymakers. This is a new tool for investors. And this is because something fundamental is happening that's actually quite serious. A famous sociologist that many of you probably read in grad school called Max Weber, he defined 3 different types of authority. One is traditional, this is monarchies. The second is legal rational. Legal rational authority is what we are all used to as investors. This is why investing in developed markets is easy, because policymakers there basically operate along institutions and legal order. It's why you don't care about politics, or you used to not care about politics in most developed markets. You might care because of some regulatory change that's coming up, but for the most part, it didn't matter who won or lost. Everyone was pretty much the same. And the final type of an authority is charismatic. Charismatic authority derives from the individual. It's somebody who got into power because of who they are as a personality. Think the Philippine president, Duterte, or Erdogan in Turkey, or Vladimir Putin in Russia, or of course, the obvious one, Donald Trump in the United States. So why is this happening? Why are these people coming to power? They're coming to power because global trust in government has obviously collapsed since 2008, and that's what that chart shows. But more fundamentally, what's happening is that a lot of people in the West actually don't think democracy matters anymore. This is a chart that was recently published by a couple of academics using the World Value Survey. It's a fascinating chart. The question on the survey is it essential to live in a democracy? And I don't know if you can see it, but basically the 30, 40, 50, 60, 70, 80, those are the age cohort when the respondents were born. What it shows is there's this dramatic decline amongst millennials in Britain and the United States in particular, and that they don't believe that it's essential to live in a democracy. In fact, Chinese millennials who believe at 30% that it's essential to live in democracy, pretty low, so 1 in 3 millennials in China think they should live in a democracy. That's higher than American and British millennials. How do we explain that? I mean, we could spend a whole hour trying to figure that one out, but there it is. What that means is that I think you're going to start seeing some pretty interesting outcomes. What's very encouraging, though, is that in the EU, there seems to be a consensus amongst generations, more or less, that democracy is important. I guess there's at least consensus for something. But what this means for investors is that it's going to be very difficult to predict behavior of policymakers. You can no longer just assume they're going to follow the rules, if you will. Yes, Trump's Twitter feed becomes more important than a bottom-up analysis. Ask Carrier or Ford or Lockheed Martin, all companies that he's tweeted about. And I think the one thing that's kind of worrying about this is that although Global Economic Policy Uncertainty Index, which tracks some of these concerns, has basically spiked to a record high, global credit spreads have remained pretty mute throughout this entire process. And I think that's going to require some adjustment over the next several years, especially as investors start realizing that policymakers are now basically on their own, and they can basically do whatever they want. The fourth paradigm is about economic shift. It's economic shift. Basically, we're leaving laissez-faire capitalism, and we're moving back toward dirigisme. Dirigisme is what the French basically called between 1950s and 1970s, it's capitalism, it still has capitalist rules, but the state is very much involved in industrial policy. It's what Taiwan, South Korea, and Japan basically used to grow in the 1970s and 80s. And by the way, Theresa May's speech this weekend, she basically said this. She said laissez-faire capitalism has failed, which is interesting because she's the prime minister of the country that has most successfully, perhaps, pursued laissez-faire capitalism over the last several years. Now, why is this happening? Why are countries moving away, and which countries are most likely to move away from laissez-faire capitalism that we as investors like? Well, I think that the answer to this is quite counterintuitive and unexpected. First of all, the reason we're moving away from laissez-faire capitalism is, again, wages fell as percent of income as globalization set in. Debt replaced income in the US and the UK, especially after 2000. And that really reached its high point in 2008. But what's interesting about this is that, US and the UK weren't really isolated during this time. And what I mean by that is France or Italy or Germany, they were exposed to the same technological changes in globalization as well. And yet, if you look at the size of the middle class as percent of population, and this is work by academic economist Stephen Pressman, it shows that the size of the middle class in Europe actually stayed, for the most part, pretty much constant. There was some variation, for example, in Sweden, as the center-right moderate party came to power and did some supply-side reforms. Germany fell from about 70% middle class to 60%, as Gerhard Schroeder's supply-side reforms happened. But nowhere did it fall as percent of population as much as in the US and the UK. And we know this because if you look at this chart, the x-axis is income inequality measured by the Gini coefficient. The y-axis is generational earnings elasticity. The higher it is, the less social mobility there is. And what this chart shows is that the US and the UK are the most unequal and the least likely to have social mobility. So that means between different generations. So it's not surprising to me that the two places where we've had populist outcomes have been the US and the UK. I mean, we've all been waiting. I know because I work in this industry and I speak to clients like yourself, and I've been peppered with questions over the last 6 years when Europe was going to collapse and when it was going to destroy itself, eat itself alive. And yet here we are, 8 years after 9 years now after 2008, we're 6 years into the sovereign debt crisis, and sure, there is populism in Europe. It has increased. But UK has voted to leave the EU. And it's the US that just voted for a celebrity game show host to be its president. And I think that's an important point. So my conclusion is that actually it's the UK and the US that are going to move towards dirigism, whereas you're going to actually see supply-side reforms, and you're actually going to see pro-market reforms in Europe. Thus far, I've been right in places like Spain. Spain has done extraordinary work. This year, I'll be proven correct in France, where Marine Le Pen has very little chance to win. And I suspect that even Italy will be pushed and, screaming and kicking along with some modest reforms over the next 12 to 24 months. But that's a very controversial view. And it would be one that, in terms of investment opportunities, would tell you to overweight Europe, especially this year, because the political risks continue to be overstated. The final point I want to bring very briefly is just that we live in a world where the news that you get, especially political news, is basically garbage. And investors have for a very long time relied on very poor information when it comes, well, not very poor, but let's say accessible and cheap information when it comes to political news. There's no geopolitical Bloomberg terminal. We rely on the Financial Times or New York Times or whatever. The problem is that very little of the world out there does the same. If you look at the left side, you see the trust in mass media in the US has actually collapsed. Democrats trust in the mass media around 50%. So 1 in 2 Democrats in America believe in the media. Whereas Republicans, basically none of them believe in mainstream media. Facebook, that's the right side. Facebook is the number 2 source of news for most Americans after local TV stations. So most Americans, not most, but second most Americans get their news from Facebook. And the internet, of course, has killed journalism. So what does this mean? It means that if you only read the Financial Times, which I know here you don't, but many of my clients, you would be surprised how many of extremely important people who manage probably some of your money too, only read the Financial Times to get their news. And if you do that, then that stuff is going to keep happening. That's on the right side. That shows you probability of Brexit and probability of Trump winning. That's what a black swan looks like mathematically. And that's what it looks like when consensus is wrong, when a probability just skyrockets the day it happens. So I think that said, it doesn't mean that everything is just thrown out the window. First of all, polls are not wrong. Polls are not wrong. The pundits in the media using the polls are wrong. For example, if you look at the right side, you see that the polls around the UK-EU referendum were actually quite close. In fact, the Leave vote was leading well into the month, and it was only after the murder of the MP Joe Cox that the probability of Remain increased. And in the case of the US election, the polls were also very tight. Hillary Clinton only had a 2.8% lead leading into the final day of the vote, and that's well within the margin of error. It has happened before that the polls were wrong, off by 3%. So the thing to keep in mind is that it's not that the data is wrong. It's not that structural, systematic analysis is wrong. It's just that probably what you're reading in the media is useless. And what that means is that investors simply cannot rely on the media to gauge political and geopolitical risk. We have to actually sit down and do it ourselves. It's as important, I think, as doing valuations of market momentum or looking at macroeconomics. So I'm going to stop there and open up to questions. In terms of what we can talk about, I have some more slides on Sino-American tensions, Europe, Middle East, and Russia, and I'm sure that'll be in the Q&A. So thank you very much.
Thank you, Marko. So please do write down any last questions for the day to Marko. I think a very interesting, thought-provoking presentation, so do keep them coming. I have one to start with. You mentioned how when we analyze what leaders such as Putin or Erdogan can do, we should probably focus more on restraints rather than preference. So maybe you could elaborate a little bit on how you see that working specifically in the US with Trump now.
So that's where a big risk exists, because Trump has very few constraints on the issues that really matter to investors. Let me just show you one table here. I know you can't probably read this, but basically this is a set of American laws going back to the US Constitution, but acts of 1917, 1962, 1974, so on and so on, that we've researched, we've put together, that shows that basically the US president can more or less do whatever they want when it comes to tariffs. There are different reasons for that. He would have to proclaim that there's some sort of an emergency, that there's some sort of a conflict that requires extraordinary use of tariff policy. But the reality is that the US president is actually quite unconstrained when it comes to using trade protectionism. So that's why I'm concerned that most investors are thinking that there's a lot of constraints on Trump. The other issue is, think about this border adjustment plan that was proposed, which is likely to be illegal under the WTO. This was actually proposed by Paul Ryan, who most of us would assume is a pro-free trade Republican. But that shows the power of the presidency. Donald Trump's election gives him immense amount of political capital, at least until he screws up. And so he's using that political capital, and in fact, it's the Republicans in the House that are coming to him, that are coming to his side. That's going to last while he is on a honeymoon, if you will, and he did just win an extraordinary election that nobody pretty much thought would happen. And I don't see House Republicans suddenly rising up to challenge this extraordinary president that just won a huge election. So this dream of, centrist conservatives in America, that somehow Paul Ryan is going to stand and try to constrain Trump, that's just not going to happen. Again, until Donald Trump does something really stupid, which might take a very little time.
Yeah, while we're waiting for another one there, Turkey.
Yes.
It's for us as emerging market investors, it's an interesting market because it's one of the few markets of the world where good companies, very good companies, are trading at low valuations. So even though you have, emerging markets on average looking reasonably cheap, it's really a story of good companies being expensive, worse companies being cheaper. But Turkey is the notable exception. So maybe a few thoughts there on where you think this is going in sort of mid to long term.
Well, I think the problem that I have with Turkey, is first of all, there's many macroeconomic reasons to be concerned about Turkey, in my view. First is that it's running economic populism. Minimum wages have gone up through the roof. The central bank is pumping liquidity into the system since the Gezi Park protests. So since mid-2013, the Turkish central bank has basically been pumping the system full of liquidity, basically on the orders of the president, because he's concerned he's going to lose power. The other issue that I worry about is geopolitics. This is a map of Syria showing different regions held by different groups. I want you to focus only on the yellow, though that's part of Syria controlled by the Kurds. As you can see, in just 2 years, the Kurds have completely expanded control of northern Syria. So this is why Turkey invaded Syria in August of last year. And while it's encouraging that they have this deal with Russia, it's positive for Turkey that they're not in Syria and are not going to be engaged in a war with Russia. What I worry is that at some point, Erdogan is going to be tempted to remove the control of YPG, which is the Syrian Kurdish group that has expanded its control, that he's going to go after them at some point. This would be disastrous because from what we know since August is that Turkish army can't fight. This is a fact. They have been completely destroyed in Al-Bab by the Islamic State, and they need Russian airplanes to bail them out now. And if they go after the Kurds in their own territory, and these are battle-hardened people, I mean, these people have been fighting there for decades, Erdogan is going to be in a quagmire. And given everything else going on in Turkey, this is the last thing Erdogan needs. But the problem is that after Mosul falls in Iraq, it's quite likely that Kurds are going to start agitating for an independent state, one that crosses both Iraq and Syria. And I think it's going to be too tempting, too difficult for Erdogan to restrain himself from doing something about that. And so I think the geopolitics remains very, very concerning in the country.
Thank you. We have one last question, back to Trump again, and you already alluded to this, but the question is if Trump can deny facts or have a very liberal relationship with facts, and a big part of his voter base essentially just read some of these more superficial news sources, what does that do to media as a check and balance, an important check and balance on power?
Well, I think that era is pretty much gone in the US. And it's been gone for a while because, to be fair to conservatives too, the liberal media is biased in its own way. And so the problem with the internet, not just the media, but the problem with the internet is that it serves everyone what they want to listen to on their plate. And so people in the US live in these bubbles where even if a conservative or a liberal politician actually makes a very good, reasoned, fact-based argument, it's very unlikely that they're going to penetrate into the other bubble because people self-select what they want to listen to. That's why Facebook being a key source of news is so concerning, because you select and the feed selects stories that you're going to read. So that's a problem. You don't get the other side of the story. So I think that's been gone for a while. That's why you had the kind of an outcome you had this year. And by the way, it's also starting to be a problem in Europe. And we're especially seeing it in Italy, where we have a potentially very contentious election coming up in 2017. We don't know yet when the early election is going to be held, probably in the second quarter in Italy. But Five Star Movement is very successful using the media, especially Facebook, in the same way, using fake news, or it's probably too harsh to call them fake news, let's just call them off-color news, to push their own view. So I think that we should expect Five-Star Movement to do quite well in the upcoming elections.
Great. Thank you very much, Marko.
Thank you very much.